It was an exciting day on Wall Street as we saw the European central banks come out with some comments to send the euro plunging, the US dollar surging higher. We did have the NASDAQ hitting all-time highs. And of course, we've had some interesting news within the media space here within the last 48 hours. And so a lot of those media stocks really starting to surge. Now, speaking of the consumer discretionary space where those media stocks are housed, I do want to focus on a consumer discretionary stock in our trade application today that is showing us a bullish intermediate confirmation signal. So with that, let's go ahead and get started. Welcome to the Market Outlook video. I'm your host, Brandon Van Zee. It's June 14th, 2018. If you're new, first of all, welcome aboard. We're grateful to have you in our audience here today. Remember, while you're on YouTube, you might as well sign up for our channel. And after you're done doing that, give us a thumbs up if you appreciate these videos. You can leave us comments as well. And then down in the description area, we do have a link that you can use to sign up for our email distribution list to be notified of when these videos are posted, and also gives you a heads up on which stocks within the S&P 500 have bullish and bearish cluster signals. In addition to YouTube, we're also heavy users of Twitter. Make sure you're following me. My handle is @BrandonVanZee, all one word. The Market Scholars handle is @market_scholars. In addition to Twitter, we're also on Facebook. You can see the web address on the logo in front of you there for our group. We'd invite you to join us there. All right, let's go ahead and do some analysis on the market. And before we do, I did want to bring up something that a lot of you have been asking us about. As many of you are aware, David and I started our new business here within the last few months. Of course, we're in our beta period right now, but we're going to be launching to the public on July 1st. And so we've only got a couple of weeks left for those of you that wanted to take advantage of our discounted offer. And so a lot of the students that did sign up with us already have left some interesting comments, and we really do thank them for their honest feedback there. If you want to learn more about Market Scholars directly through their thoughts and their words, we didn't pay them anything for that. This is just their true, honest feedback of what they have experienced so far with Market Scholars. You can see that we do have on Twitter right here, there is a link to that particular area where they have left that feedback. It'll just take you to this link right here on our website. So feel free to check that out if you are still considering signing up here before July 1st. All right, with that, let's get into the analysis of our free video here for you guys that want just general market analysis. And this is the S&P 500 that I got pulled up here. You can see that we were up about 7 points on the market today. That was a 0.25% move. You can see from a daily range perspective, it was a little bit less of a wide-ranging day here today than we typically have found through our normal ATR, or average true range here lately. So it was a bit of a quiet day, although another win for the bulls. And you can see we've had a lot of those recently. We've been bullish on the markets going all the way back here since May 4th. That day rings true to me. That was my day when I was heading back to Omaha for the Berkshire Hathaway meeting. But anyway, ever since that day, the markets have been bullish. Now, keep in mind context here. A lot of people, if you flip on CNBC or other news outlets, you might hear the phrase, sell in May and go away. Well, at this point, I'd have to believe that most people that just simply sold in May and went away are probably regretful of that right now. Now, we never know what's around the corner. Maybe we have another shoe to drop at some point. But right now, it does feel like things are going smoothly. We do have a very strong economy, low unemployment rates. We see a little bit of a tick up in inflation, but that's not necessarily a bad thing either. So in the end, we're actually in a decent spot economically, and that is then being reflected in the stock market itself, where we're seeing a lot more bullishness than bearishness out there. So as it stands right now, we remain strongly bullish on the S&P 500. We've had strong bullish posture since May 4th, and nothing has changed there. Remember, we're going to be bullish on the market unless this green line falls below 80, and it's not even remotely close to that right now. We're at 96. So it would likely take several days of downside action before we would see a bearish posture change there. So as it stands right now, smooth sailing. Let's go ahead and take a look at our next chart setup. This will be chart 4B. Now remember, for those of you that are already premium subscribers to Market Scholars, we have over 26 charts that are just waiting for you to import into your Thinkorswim platform as well. Chart 4B is this one where we have the 4 grid, where we can see all 4 of those various indices all together here. I mentioned in the intro the NASDAQ hit all-time highs. So notice down in the lower left-hand corner here, that's our NASDAQ chart. Notice that there's additional label on there today that says yearly high today. That's embedded or encoded into our ThinkScript itself, just as another eye catcher anytime the security you're looking at on this particular chart setup is hitting new highs. So that was the only one, although we got awfully close on the Russell 2000 as well. You'll notice that we hit new highs just 2 sessions ago on the Russell 2000, and you could actually call today our closing high. Let me right click and go to maximize sell right here on the Russell 2000 chart. You'll notice that the highest tick on an intraday basis was 1686.37. That was 2 days ago. However, you'll notice that we basically closed at the high. In fact, it might have been exactly the high. We were 1 penny off, but for all intents and purposes, we closed at the high of the session here today. And that close was higher than that close where we had the intraday high a couple days ago. So yeah, we still haven't ticked through an intraday high yet, but this is an all-time closing high on the Russell 2000. Remember, those are bullish things. If we had it our way, we'd want to be led higher by the Russell 2000 and the NASDAQ. That's where a lot more of that risk-on mentality exists out there. So as it stands, we have bullish postures across the board. You can see that the S&P 500 and the Dow Jones are also kind of with that green background shading there, letting you know that that is a bullish posture using that intermediate term indicator on the market forecast. All right, let's take a look at chart 4C now. Remember, this is going to be a slightly different chart setup. This is going to be our 3 green arrows chart setup, and it's going to be a quick visual example of whether we have 3 green arrows or not. And 3 green arrows is just a reference to 3 technical indicators. First of all, it's a 30-day moving average, a MACD, and a stochastics. And what we're looking for are strong trends, and strong trends usually start with a surge in some of those technical indicators. So as you can see, the shading background color behind all of the candles of all 4 of our charts are green right now. Again, 3 green arrows across the board. So not only do we have bullish postures according to the market forecast, we have 3 green arrows across the board, all 4 of our major market indices. Let's take a look at our longer term setup now. And you can see this is our 1040 crossover method chart. This is chart 4D for those of you that are premium subscribers to Market Scholars. As you look at this chart, the background color will signify whether we have a bullish crossover in those moving averages. We have the 10-period exponential moving average represented by the orange lines, and the 40-period exponential moving average represented by the blue lines. If the orange is above the blue, we view that as a positive sign. Remember, the orange line will be more sensitive because it's tracking less data. So if that's above that less sensitive line, so if the more sensitive line is above the less sensitive line, we view that as positive because it means that the bulls are in control of the price action. As you can see right here, nothing much has changed. We have to go all the way back here in the case of the Russell 2000 to June of 2016 since we had any sort of a bearish posture from a longer term perspective. So the other indices actually were further back than that by a couple of months. So in all 4 of these cases, we've had bullish postures for a minimum of 2 years at this point. Nothing has changed. In fact, for those of you that have been riding that gravy train upward, you're probably ecstatic to see that we've hit these new highs recently in the Russell and the NASDAQ. All right, let's take a look at some 12 grid analysis now. And now we've got our intra-market analysis here. And that's where we did have some interesting movements here today. I mentioned in the intro that the euro was tanking against the dollar. So I want you to concentrate down here in the lower left-hand corner. That's where we have UUP, and that's our barometer of what's happening with the US dollar. Now be aware that this UUP is an exchange-traded product, and it's really the US dollar versus a basket of other securities, but of course the euro is going to be one of the most important components within that particular basket, considering its importance. So you can see that the UUP surged today. We were up 1.3%. I'm going to right click on that, go to maximize chart, just to give you a sense of that candle. You know, if you look at all the other candles on the board from the last 3 months, really the only one that even kind of competes with it from a size perspective is probably this one back here on April 26th. So in other words, 1.3% may not seem like a big deal to some of you if you're used to looking at growth stocks every day, but for an entire currency, it's a dramatic movement. And you can see that we were due for a bounce. It's kind of nice to see these technical setups when the charts do what you expect them to do. Now remember, the US dollar has been in an uptrend for quite some time. We finally got a pullback. A lot of times what we see out of these charts that are trending is they pull back to that upward trending moving average. They kind of stabilize right around those levels, and then they use it as a launch pad higher, and that's what we're seeing right now. So anyway, that could help support small caps in the United States. Remember, that's not necessarily a benefit to the mega cap companies. Other things of interest, U.S. government bonds rallied today. Notice that the TLT right here in the middle was up 0.83%. That's another one where we had a pullback to a moving average and a bounce off of that moving average itself. So keep your eye on the long bond. Remember, those things don't always work hand in hand with one another as far as the US dollar and the long bond moving up at the same time. Oftentimes what you'd found in the past is that the US dollar and yields themselves would go up, meaning that the bond prices themselves would go down. So this was a little bit of a peculiar day from that perspective. We did see preferred stocks making a nice move as well. Some of you might recognize that candle yesterday as maybe a little bit of a hammer shape to it, potentially a bull flag setting up there as well on PFF, which is what we use to track preferred stocks out there. You can see that the VIX was down 6% today. That's a pretty decent sized day to the downside. Basically gave back everything from yesterday. Remember, yesterday people were a little bit more nervous just because of what was going on with the Federal Reserve and this expectation of additional interest rate hikes later on this year. But the markets came to their senses very, very quickly, and here we are back to those scraping those historical bottoms in volatility right now. One other thing of note, notice down below here, ag commodities. They got kicked in the teeth today, down 1.34%. Now we're using DBA as the ticker symbol to look for that. Remember, anytime those background color of the charts are pink like it is right here, that signifies a bearish posture using that market forecast intermediate term line. For those of you that are following along at home, this is chart 4E. But anyway, I was kind of looking at this area about a week ago and seeing this bullish cluster or oversold cluster, however you want to phrase that, and thinking maybe there was a chance for a reversion to the mean, but you know, traders had something else on their minds here today. They're throwing it off to the side, and maybe part of that is what's going on with the dollar there as well. Of course, a lot of ag commodities, whether it's soybeans or wheat or corn or what have you, does get traded internationally as well. Crude oil, I don't mind the bounce that's taking place right here. You know, we had an oversold cluster signal here as well about 2 weeks ago, and we've had a nice consistent rally back higher there. In fact, you'll notice that we now have a bullish posture again on crude oil with that green background color there. Of course, we do still have a downtrending 30-day moving average that we'll have to contend with eventually, but right now that's at least a good sign that it's found some stabilization right there. Let's take a look at our next set of 12 grids. This will be our, let's see, foreign stock market 12 grids. Again, same thing here with the background colors. Green means bullish, red means bearish, and this is chart 4F for those of you that are following along at home. So once again, Brazil got torpedoed. Maybe the country of Brazil is concentrating their energy and their efforts on the World Cup that, of course, just got started here rather than on the financial markets. But, of course, Brazil's been a house of pain for a long time now. And you can see that it was down another 3% here today. So that one being a little bit skittish. Just be a little bit careful on that one. Same thing goes for South Africa in the other corner of our screen here in the lower bottom right. EZA is the ticker symbol we use there. That's just been a really ugly chart right there. Lower highs and lower lows across the board. As we look at some of the other charts that are out there, you know, I don't see a lot of great looking trends. The one that I've been kind of pointing out in recent presentations is this one down here, Israel. Israel's looking decent, but it had a fairly good sized pullback here today as well. So you got to be careful on that. Let me right click on that. I'm just curious if we're going to have a bullish intermediate confirmation signal. We actually do. However, you can see that the blue line kind of overshot the ideal setup. So remember, the bullish intermediate confirmation signal exists when we have a bullish green line combined with the red line on the same day. but ideally we'd like to get this blue line between 50 and 20. You can see the blue line actually fell all the way down to 13 here. So, but sometimes those can be good signals when we have an uptrend in place and you're waiting for kind of a buy the dips mentality. We've had a 2-day pullback here in Israel, and that generally has been a time to be looking at adding to a position there in the past. Let's now take a look at our other 12 grid. This would be the U.S. sectors 12 grid. Remember, this is going to be specific to stocks in the S&P 500, which you find in the upper left-hand chart of this 12 grid. This is chart 4G for those of you that are following along at home. And you can see that most sectors right now are bullish. The only exceptions to that, we've got the financials that actually had a pretty ugly breakdown day here. Now remember context there, just mentioned a moment ago what was going on with interest rates, so I'm sure that had a lot to do with it. Notice that the financials were down 0.93%, whereas the utilities surged 1.24%. That's usually not a coincidence when you see that sort of behavior. Usually is directly related to what's going on with interest rates. So in both of the cases, the background colors of the charts are red or exhibiting bearishness, but the directions of the securities are a little bit different in that the financials were probably bullish up till recently and just went to bearishness, whereas utilities, if they get a couple more days like they saw today, I would anticipate them coming out of that bearish posture into a bullish posture. So keep your eye on those. But our trade application example today, as I mentioned in the intro, is going to come from the consumer discretionary space. Notice that's your chart in your upper right-hand corner right there. I mean, holy macro, look at what's going on here, ladies and gentlemen. I mean, day after day after day, building upon building of strength right there. Of course, the media stocks have been a big reason behind that. So if I were to come back over here, take a peek at some of those media stocks, let's just kind of go through a variety of them. I wanted to point out in particular Disney. I mean, Disney's looking like a champ here in the last couple of days. After that AT&T Time Warner deal was approved, a lot of people expected Disney to be trading lower because Disney is in pursuit of the Fox assets. Of course, the Fox assets have been going up, 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 up and away. This is Fox A right here. This is actually a stock that we have on as an OCO bracket order in my strategy lab class. For those of you that are following along with that trade, we almost hit our price target. I think our price target is at like 44.73. So we came within a nickel of ticking out of that position here today. That's been on a rapid rise higher because, of course, Comcast and Disney want those Fox assets. Now that the judge has approved AT&T Time Warner, the thinking goes that there's going to be merger mania within the media space itself. So let's take a peek at Comcast, another potential suitor for those Fox assets. And you can see that even Comcast is rallying strongly. Again, that was not the expectation just a couple of days ago. The expectation would be that Fox assets or ticker symbol Fox A should be surging because they're the buyout target, but then the two potential suitors of Disney and Comcast should be struggling because they're going to really try to outbid one another and basically throw as much money at the buyout as possible. But we're actually seeing that shareholders, or at least traders right now, are encouraging that type of behavior. So look at this nice bounce out. We were trading well below that moving average yesterday morning. We've surged on Comcast from basically $31 up here close to 34 in just 2 days. That's a really nice behavior right there. Others in the space that are doing reasonably well, there's Charter. It's finding a bottom there as well. I wanted to point out Dish. Dish is kind of a sleepy name in the space, but of course a couple of years ago DirecTV got bought out, and so who knows, maybe Verizon comes in and tries to scoop up Dish while the doors of mergers are open. So point being, there's a lot of speculative activity right now going into the media stocks, which is fueling a lot of the robust price action within consumer discretionary themselves. Now, one thing I did want to point out, one of the areas that's been kind of left behind in consumer discretionary are home builders. Let's take a look at some of those. Notice that Lennar has really come down from 65 down here to 53. Pulte, PHM is one. Notice Pulte got really smoked there yesterday. DHI is another one. That's DR Horton right there. Toll Brothers. Toll Brothers actually had kind of an interesting long lower shadow here today, so keep your eye on that. But the point being, a lot of the home builders are struggling here, and of course, part of the reason behind that might be interest rate environment. But one thing I have noticed is that despite the home builders themselves struggling, we've actually seen a lot of the ancillary plays holding up reasonably well. Let's take a look at Trex. I use Trex for my decking out back of my house, and you can see that Trex has been in a really nice upward trend here within the last couple of months. They actually have a stock split coming up, as this is getting to be a little bit more of an expensive company here. Another one that caught my eye is Pool. Of course, as you might expect, that is a company that's involved in swimming pools. And you can see that Pool hit a new price high here today, at least a multi-month price high, and broke out above some of those resistance areas as well. So that then leads us to our trade application example for the day, which will stick with one of those ancillary housing plays, and that's Tempur-Pedic, or these days it's known as Tempur Sealy. Ticker symbol is still TPX. Of course, there's been some mergers in that space over time as well. And as mentioned in the intro, the reason that this one looks a little bit more interesting here is, first of all, it just hit a new 3-month price high yesterday. But we've had a pretty significant pullback since that occurred. It ticked up here to 53 yesterday. It basically touched 50 at today's close. So just like that, snap of the fingers, this thing's down $3 per share in an otherwise fairly normal market environment, and of course belongs to that consumer discretionary space that is seeing plenty of money flowing into it. So with this pullback in price, notice the setup using the market forecast down below. We've got that green line with a bullish posture, and so that's why, of course, we've got that background color green up here. On the same day, which is today, we've got the red line, which is the momentum line, in the lower reversal zone, so that occurs when it's below 20. And then we've got that more ideal setup with the blue line between 50 and 20 as well. So that near-term line right now is at 38 percentile. In addition to that, for those of you that like to look at market sentiment, we don't look at that a whole lot here, but on this chart, it's that dotted orange line you see back there. You can see that's also trending higher after spending a lot of time in the penalty box down here below 20. It's now gone bullish here as well. Of course, we've got a rising moving average there, and price is still above that rising moving average, and so that's a green line, or a green color there, as opposed to yellow like it was over here, and then red like it was back here. So again, that's generally perceived as a bullish sign. We've got a bullish posture using the market forecast. We've got a rising moving average, and price remains above that rising moving average. Now, in addition to that, we shouldn't have earnings until August, if I'm doing my math right. So I'm hovering my mouse over this blue icon on the chart here, and you can see that the last time they had earnings, if I do that one more time, there we go, it was on May 3rd. So generally, if companies stick to their 3-month schedule, Tempur Sealy should be announcing their earnings probably the first week of August. So that means that the July contracts should not be kind of influenced by a potential earnings gap up or down, which I know some of you do appreciate as well. So when I come over here to the trade tab, I'm looking at the various strike prices. Now, be aware, this isn't Apple or Tesla. This is a lesser known company that less people are trading. So be aware, first of all, the open interest here. A couple of them in the thousands, but otherwise in the hundreds. But I'll leave it up to you to determine whether the liquidity is good enough for you or not. But you can see that we do have some pretty robust implied volatility there with those July contracts. 45% is well above what most stocks are showing at this current moment, with the VIX near all-time lows. And if I do what's known as a bull-put spread, remember that's the same type of a trade that I did 2 days ago on Facebook. So again, a reminder of what that is for those of you that are newer to options trading. The idea is it's a credit spread, first of all. So we take in a credit to start the trade, and our goal is to hang on to as much of that credit as possible. So in order to kind of highlight that example, let's use the 47.50 here, which would be where we have our 30 delta as our potential sold strike. So I'm going to right click on that and go to sell, and then go up here to vertical and choose vertical. So that loads our trade up down below. So notice that this minus sign before our 1 right there means that we're selling the 47.50 put, and that's kind of our line in the sand, so to speak. That's where we want our stock to stay above. Now remember, the stock right now is at 50. It was at 53 just yesterday. So as long as it stays above 47 for the next 36 days when these July contracts expire, then we will make money on this trade. So if you believe this stock will go up and continue the intermediate term uptrend that it's been in for the last couple of months, then we should do fine on this trade. But the nice thing about selling a bull put spread like we are here is it allows for a variety of outcomes to still be successful. So another possibility is this thing just goes sideways. If this thing lands exactly at $50 per share in 36 days, we're still going to make money. We just need it to be above 47.50. Heck, this stock could fall $2 per share, could be trading at 48 bucks, and we'd still make money. Even though this is a bullish trade setup, this thing could fall $2 per share and we'll still make money. What we don't want to have happen is for this thing to completely fall out of bed, so to speak, pardon the pun, here dealing with Temper Sealy. What we are going to receive for this is 60 cents worth of credit. Now remember, part of this trade is that we're buying the $45 put. So that way, if something just terrible comes out of the blue and this thing has accounting problems, or the CEO gets hauled away in handcuffs or something along those lines, and this thing, we wake up one day and this thing's trading at $25 per share, basically everything below $45 per share is covered. That's kind of our insurance that's built into the trade itself. Now remember, that doesn't mean that we're going to make money, but it does mean that we're not going to lose more money for each dollar that it goes down lower than 45. So it's a way for us to define our risk. So if we wanted to see what our return on risk was for this type of a trade setup, let's go ahead and click on confirm and send. You can see if we were doing one contract, we would take in $60 to start this trade, and our worst case scenario is that we would lose 190 bucks. Now that would occur if this stock would plunge basically $5 per share from where it's at right now, which of course we're not anticipating, but is always possible, I suppose. So that's our built-in hedge that I mentioned before. Let's get our calculator out. Let's get our $60 typed in there and divide it by our max loss, which is 190. And you can see that this is a 31.5% return on risk. In fact, I'm pretty sure, isn't that the same return on risk that we had when I did the Facebook trade 2 days ago? It sounds oddly familiar, or maybe it was in one of my other classes. I don't know. But anyway, this is up and over the threshold of 30% that I'm generally shooting for with these credit spreads. So I'm willing to take this trade. Now also remember that if we wanted to look at the break-even price, it's $46.90. So if you wanted to see what that would look like on the chart, let me come back over here to the chart for just a minute. Let me get my drawn items out. And I'm going to draw that on the chart. Let me right click, go to edit properties, and 46.90 is our break even. Let's make this a slightly different colored chart here. Let's go purple, and let's make it a dotted chart, and let's make it nice and wide so all of you guys can see it, even if you're using your cell phones here to watch this video. There we go. So that purple dotted line that we see right there represents our break even. So you'd see that we'd have to breach this upward trending moving average fairly significantly to get down to those levels where we start getting into trouble with our trade setup. So with that, let me come back over here to our trade tab. Let's go ahead and place this trade in our paper money account. Review it one last time. Everything looks good. Let's go ahead and send that one in. All right, well, I want to thank you for joining me here tonight. Always a pleasure to go to work for you here at Market Scholar. So as a reminder, for those of you that are considering signing up for our premium service, we'd encourage you to go out and check out all those comments from our current students that you can find either on Twitter or just by going to our website if you so desire. Remember, if you got value out of tonight's video, the one ask that we do have for you, while you're on Twitter, give us a like and also a retweet if you so desire. That would help us learn that you guys want us to do these videos on a daily basis for you. So with that, David will be back with you tomorrow. I'll look forward to seeing you guys next week. Have a great weekend. Best of success with your trades and your investments. Goodbye for now.